Welcome to my channel. This channel is for educational purposes only. I clarify concepts so that you can study them and implement them as you choose. I am purely sharing my experience of over 40 years in the stock markets. Let's dive into the topic. The Nifty50 index, often treated as a barometer of India's economic health, has gone through visible stress and volatility in recent times. Sharp rallies have been followed by equally sharp corrections, leaving many investors confused and fatigued. Yet, quietly and decisively, one company has moved in the opposite direction. A specialty chemicals manufacturer called Aether Industries has not only held its ground, but has significantly outperformed the broader index. The obvious question is why? The answer lies not in market sentiment, but in business reality, financial discipline, and strategic foresight. Let us begin with the financial core, because markets may wander, but numbers rarely lie for long. Aether Industries has delivered a sequence of results that point to improving operational quality rather than a one-off spike. In the second quarter of the financial year 2025-26, the company reported a year-on-year jump in net profit of more than 55%. More importantly, this was not an isolated quarter. The company has now posted positive profit growth for 4 consecutive quarters, indicating that earnings momentum is becoming stable rather than episodic. Equally significant is the balance sheet. Aether operates with very low leverage, reflected in a minimal debt-to-equity ratio. This reduces financial fragility and gives the company room to absorb economic slowdowns without being forced into defensive decisions. In periods when the broader market is nervous about interest rates and liquidity, such balance sheet strength becomes an invisible but powerful advantage. Financials alone, however, do not explain sustained outperformance. The real engine lies in the nature of Aether's business. The company operates in a niche segment of the specialty chemical space, focusing on advanced intermediates that require complex chemistry, high precision, and stringent quality controls. These are not volume-driven commodities. They are capability-driven products, often embedded deep inside pharmaceutical, agrochemical, and specialty material value chains. This complexity creates natural entry barriers. For several of its products, Aether is the sole Indian manufacturer, which sharply limits competitive pressure and customer churn. The defining strategic moment came with the signing of a 10-year exclusive manufacturing agreement with Milliken & Company in 2025. This was not just another client win. It was a validation event. Long-term contracts of this nature lock in revenue visibility, improve capacity utilization, and significantly reduce earnings volatility. As production scales up, this agreement alone is expected to contribute hundreds of crores annually, turning future growth from a forecast into a contractual reality. When fundamentals and strategy align, the market eventually responds, and this is visible on the charts. Aether's stock has consistently traded above all key moving averages, ranging from the short-term 5-day average to the long-term 200-day average. This alignment is a strong technical signal that sustained buying interest is present across time horizons. The stock has also recorded multiple 52-week highs, even during phases when the Nifty50 itself was under pressure. This tells us something important. The buying is not speculative momentum chasing. It is accumulation driven by improving earnings visibility and institutional confidence. In simple terms, price is following business performance, not the other way around. When fundamentals and strategy align, the market eventually responds, and this is visible on the charts. Aether stock has consistently traded above all key moving averages, ranging from the short-term 5-day average to the long-term 200-day average. This alignment is a strong technical signal that sustained buying interest is present across time horizons. The stock has also recorded multiple 52-week highs, even during phases when the Nifty 50 itself was under pressure. This tells us something important. The buying is not speculative momentum chasing. It is accumulation driven by improving earnings visibility and institutional confidence. In simple terms, price is following business performance, not the other way around. Conclusion. To summarize, Aether Industries' outperformance is not a mystery and certainly not an accident. It is the outcome of consistent financial improvement, intelligent positioning in a high-complexity niche, and strategic partnerships that convert uncertainty into visibility. While the broader market reacts to macro headlines and shifting sentiment, Aether has marched ahead on the strength of its own business fundamentals. The larger lesson here is timeless. In investing, strong companies do not wait for markets to be kind. They create their own momentum. When business quality improves, the index becomes background noise. Thank you for watching. If you found this analysis useful, please like the video, share it with fellow investors, and subscribe to the channel for more such long-form, experience-based insights.